Welcome back. You're watching Market Fatfat right here on ET Now, a show where we get to all the stocks that are buzzing based on news flow as well as on technicals. And talking about technicals, Osho Krishan is joining us on the show right now. A very good afternoon to you, Osho. Thank you so much for joining us on ET Now. And the first stock that you're going to talk about is a stock that I think right now every technical analyst is talking about, and that is AB Capital. What exactly is happening in the stock? Why the bullish take? And actually, do you have a bullish call as well on AB Capital?
Good afternoon, everyone. Well, yes, looking at the overall technical charts, AB Capital is looking very bullish. As of now, also, it has tested the 52 weeks high, and the overall structure of this counter is very positive. So any dip towards 174 will be considered as a healthy correction, and one should definitely look to accumulate this counter, because the consolidation which it has broken, the immediate target comes around 185 on a very near-term period. But also looking at the overall trajectory for this counter, one cannot resist that it can move towards 195, 198 levels from medium-term perspective. So overall technical structure-wise, AB Capital is looking very positive, and any dip towards 174 should be considered healthy, and one should definitely try to accumulate this counter.
Let's move on and talk about landmark cars, and this stock is in focus. ICICI Securities has actually initiated coverage with the ad rating and what they believe that why landmark cars will be beneficial, what will be working out for them is that they'll be beneficiary of the ongoing car premiumization in India. We've seen luxury cars seeing a higher demand coming in as well, and that has resulted in the rising portion of the UVs and 10% CAGR in the car average selling price as well from FY21 to FY23 as well. What ICICI Securities is also highlighting is that nevertheless they believe that the mean average selling price in India's PV industry is only around $13,000 US versus which is in US and developed markets. When you look at it, it's around $35,000 US. So that is a big difference that is coming in there, and they believe premiumization still has a long way of growth in the Indian markets as well. And Landmark Cars is actually ready to be benefited by this by adding new OEMs to its client list in addition to the ones with whom it is already doing business as well. They also see a steady profitability and asset-light model for Landmark Cars, which operates at around 20% of return on equity, which will work out well for the company. And that is why we're seeing that the stock is buzzing a grade up 4%.
Alright, let's talk about a stock that saw a sharp dip at open, but then thereon went on to recover from the day's lowest point, and that is Z. That particular counter is in focus. Let me first take you through what's why the fall in the stock price, and then I'll tell you the course of action that has happened. SEBI passed an interim order versus Subhash Chandra as well as Puneet Goenka. SEBI barred Subhash Chandra as well as Puneet Goenka from holding directorial and key managerial roles in an interim order. SEBI has found that the siphoning of funds from the listed entity for their own benefit. No processes and structures inside ZEAL to stop poor governance practices is what SEBI has noted. They've said the flagship company of the group, the ZEAL, was used like a piggy bank by Chandra and Goenka. And they also said that ZEAL falsely claimed in FY20 annual report that it had received all the funds from associate entity. Next course of action, what has happened is now the Z promoters have moved SAT against the SEBI order. SAT is yet to admit the appeal. Matter will come up for admission only on June 15th. Like I mentioned, the SEBI had barred Puneet Goenka and Subhash Chandra from holding directorial and managerial role in an interim order. Also, here Puneet Goenka's counsel that spoke to SAT saying that no show cause notice was issued to him and principle of natural justice has not been followed. This is what the appeal of Puneet Goenka at SAT said. So now we have to wait and watch out what happens on June 15th when SAT will take up or admit this particular plea by Puneet Goenka. For now, the stock has definitely recovered pretty smartly from the day's lowest point.
Okay, that's Z for y'all. But let's move on and talk about the next stock that is in focus. And in terms of, we'll go across to Osho in terms of what are you seeing in terms of charts coming in for Gail? Because it has remained in that range of around 96 to 110 and not managed to go past that level or sustain above that level of 110. What is the view now coming in for Gail?
Overall, the structure for Gail is very bullish, but as you have mentioned that the upper side or the resistance is limited towards 110 and 112. So that is the immediate resistance that even we can see from here onwards also. But at current levels, we have seen a consolidation breakout. So as the stock has taken a dip from the levels of 114, it has consolidated near 104, and in today's session, we are witnessing a consolidation breakout. So there is no very bigger target for this counter as of now, but for the short-term traders, one can definitely look that this counter has the potential to retest the levels of 112 to 114 zone. And once we surpass those levels, then only the counter can attract a fresh buying in these at these levels. But for short-term perspective, 112 to 114 should be the immediate resistance that one should definitely look for from current market price.
All right, that's the take coming in on Gail and what you should watch out for when it comes to the technical levels. But Lisa, what's happening with Greaves Cotton? Why is this one in focus today?
Yes, Greaves Cotton is surging in trade, and that is because its electric vehicle arm, that is Greaves Electric Mobility, in short GEMPL, they have partnered with NBFC Bike Bazaar Finance to finance their EVs. This is for their three-wheeler portfolio. They'll be providing flexible financing options for the portfolio, and the collaboration will benefit Greaves Cotton as well as the customers, because the customers will get around 85% of the on-road pricing as a loan under this partnership. The partnership will first take effect in Uttar Pradesh and Bihar, and then it has plans to move nationwide in the near future. So, it will enable more customers to access GMPL's electric vehicles and also cover a broader base all over India. So, that is why we can see Greaves Cotton surging in trade today.
Okay, let's move on and talk about the FMCG major HUL. Vamakshi, this one is buzzing in trade. It's among the top Nifty 50 gainers as well. What is the reason behind this?
Well, Vinny, there is a note that actually came in from Goldman Sachs on HUL, and they've actually gone ahead, maintained a neutral rating, but nevertheless, they've actually gone ahead and hiked their target price from 2,700 to 2,750 per share. Now, they are expecting volume growth as well as the margin recovery to lag peers as far as the first half of FY24 is concerned. But they are stepping up their ad spend. So, when we look at it from a medium-term perspective, this move is actually positive for HUL. Apart from that, they also believe that the sequential EBITDA margin expansion is expected to be slightly muted as far as HUL is concerned. So, given all these factors, we do have Goldman Sachs maintaining a neutral rating, but nevertheless, they've hiked their target price from 2,700 to 2,750, and that is the reason why HUL is in focus today. The stock, as you can see, is up nearly 1.5% as we speak.
All right, that is HUL for you. But Osho Cipla, a pharma major, do you think this one merits a buy right now?
See, Cipla has seen a very decent dip from the levels of 1180, but from the lows where it has started gaining the traction around 860, 870 levels, there we can witness that the volume has been increased. So from here onwards, even one can expect that this momentum will be gradual, it won't be very fast. But on the higher levels, the immediate target of the bearish gap, which is present around 1000 to 1020, that is to be played as a very strong resistance. So the immediate target for short-term traders should be near about 1000 to 1020, but the time it surpasses the bearish gap above 1020, then from there onwards we can expect the momentum to be carry forward in this counter, and this counter has the potential again to regain towards 1100 levels from short to medium term perspective.
Okay, keep an eye out on those levels for Cipla. But let's move on, talk about PB Fintech. This one has been focused in the last couple of weeks as well. Today also it's in focus. Now we had an article that came in the ET which said that PB Fintech is actually looking to wipe out the accumulated losses in the next 4 years. Furthermore, what they are also saying is that this is mainly going to be on the growth of its top line. That's the revenue growth that they'll be seeing coming in. The total revenue for the company increased to 1,710 crores in FY23 versus 1,200 crores in FY22. Also, the losses had already started seeing a bit of a narrowing coming in, because losses narrowed to 488 crores versus 833 crores in FY22. What they are also saying is that FY24, they hope the EBITDA is going to be coming out of the core business will be more than enough in terms of to cover all the investments, and overall as a company they should be profit positive, PAT positive for the full year as well. That is for the next year, that's FY24. And what the management is also saying that they want is 1,000 crore PAT by FY27. That's 3 years from now as well. So yes, positive commentary that had come in, and this is according to the ET reports.
All right, let's talk about NTPC Osho and where is NTPC headed from here on?
See, overall, the technical chart for NTPC is very strong because the counter has been in a secular uptrend. But recently, we have seen that it has breached the levels of 52-week high, which was approximately around 180, 181 zone. So from here onwards, one can expect, because the technical charts and the patterns which it has made, one should definitely expect that the upside target should be near about 194 to 195 in a very short term period. But looking at the recent traction in the buying, because there has been a very stellar bull run from the levels of 175, so there should be some kind of cool off that we can witness in the coming days. So if the counter comes towards 180 zone, one should definitely try to accumulate it for the immediate target of 194. And once it surpasses those levels, then we can even see 200 figure in NTPC.
All right, moving on, let's shift focus and let's talk about not one but two stocks. That's the LIC as well as Bajaj Finserv. Why buyer both of these counters is in focus is the fact that LIC, you have Ambit that has come out with a note on both of these counters, and LIC has received its first sell rating since its debut about a year ago. As Ambit Capital has initiated a coverage with a sell rating, citing continued loss of market share as private peers are stepping up competition. So LIC's market share in terms of new business profit dropped to approximately 63% in FY23 from 70% in FY13 and will likely drop to 55% by the end of the next decade, is what Ambit Capital has noted in its report. They're saying the market share loss will be triggered by challenges in growing sales of non-participating products, while LIC's bank assurance partnerships are mostly with PSUs, where productivity improvement can be a task. They are also saying that a third of LIC's agents are above the age of 50 years and may not be willing to be retained. And also they are saying LIC's margins will improve, but it is difficult to catch up with the private peers. So they are initiating a sell call on LIC with a target of around 590 rupees per share, while also on Bajaj Finserv, a sell recommendation with a target of 1,130 rupees per share. So as you can see, that's the call coming in for both of these counters. However, the stocks are trading with a mild positive bias.
Okay, let's move on and talk about Coal India. Osho, when you look at the charts for this one in the last 6 months, seems like the stock has not done anything exciting in terms of returns for an investor. What is the view now coming in on Coal India? Is it the right time to enter the stock, or maybe we would see a bit more of a correction?
See, we have seen a consolidation zone for Coal India at the levels of 205 to 225. So 225 was a major resistance for Coal India, from where it has witnessed a breakout in the last month, and from there onwards it has surged towards the levels of 250. But again, the counter has came down towards the same levels of 228 as of now. So 225 to 26 should be considered as a very strong demand zone for this counter, because this counter is retesting the neckline of the breakout. So at these levels, one should definitely try to accumulate this counter for the immediate upside of 240. And also on technical parameters, the counter has almost entered into the oversold region. So that means that from here onwards, the downside will be limited. And even the technical charts also, and looking at the 200-day SMA, it is also placed near about 222 zone. So that means 225, which was the resistance, should be acting as a very strong demand zone for this counter, and one should try to accumulate it from short to medium term perspective.
All right, moving on then. Lisa, let's talk about Tejas Networks. Why is this one in focus?
Yes, Tejas Network is in focus, and the reason being that they have received an order from Tata Tele. This is for the network modernization deal that they have received an order. They will be deploying ultra-converged broadband services for Tata Tele's business services. The management said that this bears testament to their emergence as an enterprise provider and also a metro vendor of choice. So as we can see, the stock is trending upwards. It was up around 2% in early morning trade, but then since then it has cooled down.
Let's move on and talk about IOC at stock number 30 then. And on the charts, IOC, Osho, what is the view coming in for this one? Last 1 month, it's seen a gain of almost 10% in terms of the returns. What is the upside that we should be expecting? What is the target price that we should keep an eye out on?
From short-term perspective, the target price of the pattern which it has created was something around 94-95 levels. So that has already been achieved. But if you will be looking at the broader picture, this counter has made a cup and handle kind of a pattern, for which the first target should be near about 98, but that should be on a gradual basis. That will not be coming on a very short-term period, but the first target that one can expect is of 98. Any gradual cool off towards the level of 90 should be considered as accumulation zone, and one should definitely try to accumulate this counter around 90 odd levels for the immediate target of 98. And even we are expecting that this counter should move towards the levels of 100 also in the short to medium term perspective. So we are having a bullish approach, but looking at the overall momentum in the recent period, some cool off can be expected in this counter.
All right, moving on. Vamakshi, why is Tata Steel in the spotlight today?
Well, Cheryl, the stock recently disclosed its annual report, and here are some of the important takeaways that came in from there. Capacity expansion as far as its capex plans are concerned for FY24. The projected capex is around 16,000 crores on a consolidated basis, and this is expected to be mainly financed through internal accruals. This is in line with their objective of achieving its 2030 target of an overall 40 million tons per annum capacity. Now, as far as its amalgamation is concerned, it is currently going through judicial as well as regulatory processes. They expect the process to complete by the end of this financial year. And as far as the UK business is concerned, the company has had active and detailed discussions with the UK government in relation to the future of the UK business, as well as encouraging its transition to green steel and ensuring cost competitive landscape. So that is the news flow surrounding Tata Steel. We have some comments coming in from the company, and that is the reason why the stock is in focus today. As you can see, the stock is trading higher by almost 1.5%.
Yes, absolutely. Keeping an eye out on Tata Steel as well. Let's move on and talk about Siemens. Today it's trading with gains of almost 2% in intraday as well. The gains that we're seeing there. And when you're looking at overall on a 6-month basis, Osho, seems like there was a bit of a correction there, but now again it's seeing an up move coming in. So what is the view on the charts coming in for Siemens? Should we expect a run-up?
See, overall capital goods are very lucrative for investment opportunities, and whenever we see a gradual dip in any of the capital good companies, those augurs well for the bulls in the market. So we have seen a decent correction from the levels of 3900 towards approximately 3400 levels on the technical chart. And to be very precise, the 100 EMA has always historically has been tested as a very strong support zone. So what we are witnessing today, or in recent period also, that from 100-day EMA we are witnessing some kind of buying traction in this counter. So from here onwards, again we are expecting that there will be a gradual move. The first target or the immediate target will be of 3900, which is the recent high, and once we breach those levels, then even we are expecting 4100 levels to be seen on the technical charts.
Keep an eye out on that level as well. 4100 could be a possibility coming into Siemens. Let's move on and talk about Reliance. This one is in focus today. We had a note that came in from Bernstein where they're maintaining an outperform rating on the stock with a target price of 3,040 rupees per share, which is almost an upside of 22%. Now, the main focus what Bernstein is highlighting is in terms of the clean energy, that's the solar battery and fuel cells, which represents the new growth pillar for Reliance, which is around a $2 trillion US dollar in terms of investment in India through 2050 as well. Now, furthermore, what Bernstein is highlighting that India targets the solar capacity of around 280 gigawatt and 5 million tons of green H2 production by 2030 as well. So they expect the EV penetration that will reach 5% for PVs and CVs and 21% for two-wheelers. The clean energy could have a total addressable market of $30 billion in 2030, and obviously that gives an opportunity for Reliance as well. They believe that the clean energy business is to be worth around 200 rupees per share today, but with a plenty of opportunity and scope to expand over a period of time as well. And that is why the stock is buzzing in trade as well, up almost 1%.
All right, moving on, let's talk about Dabur, Osho, and where do you see Dabur headed in the FMCG pack?
He has gained some kind of buying traction, and it is holding the 200-day SMA on the daily chart. And looking at the recent chart structure or pattern, that we can say that it is making a flag pattern breakout, which will be seen above 565 zone, and from there onwards we can expect 50 point of upper rally in this counter. So one should definitely keep a tab on 565 levels. The time it surpasses those levels, then from there onwards there will be a gradual up move towards 600 and 610 levels, from short-term period.
Alright, moving on, let's talk about RK Forging, Lisa. Why is this one in focus today?
So Ramakrishna Forging is up around 6% and it touched on not only a 52-week high but also an all-time high. It's around 410 trading today right now. And the reason being that it has gained on the back of an incorporation of a new company. It has tied up with Titagarh Rail Wheels Limited and Ramakrishna. They will be manufacturing and supplying forged wheels together. They'll be holding equal stake in this newly corporated company, 50% for both Ramakrishna as well as Titagarh Rail Wheels Limited. So well, as we can see, the stock is trending. It's at an intraday high right now. And even in the last 6 months, it has given a return of 61% versus the benchmark indices, which has just given 0.5% return during this period.
Let's move on and talk about Astral then. Vamakshi, why is this one in focus?
When we look at how the stock has moved recently, in the last 1 month, the stock has surged by over 25%. And in fact, we also have a note coming in from Nuvama, and they believe that this stock is now trading very close to MSCI standard index inclusion levels. Now, the inclusion will actually lead to an inflow of approximately 160 to 170 US million dollars, and that is what they believe. As per June 12th global market cap cutoff levels, the stock needs to surge by approximately 2% in order to make it, and they believe that the momentum in this stock should continue in this name. The cutoff levels for August review will be released in the later half of July 2023, and on the back of this news flow that has come in, Astral is definitely in focus. The stock is trading high by almost over 1.7%.
Alright, let's talk about SJVN. It's bagged a 200 megawatt wind power project with having a tentative construction cost about 1,400 crore rupees. This order they've bagged from Solar Energy Corporation of India via the competitive bidding process. And on back of that, you can see SJVN at one point in time it was trading higher back as much as about 3% right now. Cooled off from those elevated levels, nevertheless holding on to gains of about 1.2% as we speak, Vinny.
Let's move on and talk about Escorts Kubota on the charts then. And Osho, what are the charts indicating for this one? What is the target price that you have in mind for this?
I've witnessed an inverted head and shoulder pattern breakout on 31st of May. And after that, there has been some kind of correction that can be said as the neckline has been retested from the last day trading session. So that's also a very healthy construction that can be seen on technical chart. So from here onwards, and on the basis of technical pattern breakout, one can witness a target of 300 odd points from here onwards. So that comes around 2400 levels on the technical chart. But before that, we have some multiple resistance in between. That is that lies approximately from 2300 to 2350. So this will be the first target for accumulation in this counter. And post that, we can even witness 2400 in the near period in Escorts.
Alright, so that's the take coming in on Escorts Kubota, and that was indeed the last stock on this edition of Market Fatfat. Thank you so much, Osho, Kunal, as well as Lisa and Vamakshi for joining us on the show. With that, it's a wrap on this edition of Market Fatfat. Goodbye from Vinny, myself, and the team that put the show together. But before we wind down, here's the exclusive conversation that my colleague Ankur Mishra had with Moody's Investor Services, as well as with ICRA. So listen in what they had to say on the economy.
Sure. From a global landscape perspective, we see that credit conditions are improving in India. Banks' balance sheet have been repaired and corporates have deleveraged themselves. In fact, we have taken positive rating actions on Indian banks in the past 12 months or so. And we think Indian banks are well placed to withstand even the global banking crisis that we are seeing, much more in the US regional banking system.
Right. One of the concerns which has been raised recently by banks has been this ECL provisioning part, where many of the reports have come, how much will be the impact. In fact, we at ET Now, when we spoke to State Bank of India recently, they said that the impact will not be more than 25,000 crore. Overall, I want to understand, is it a near-term concern? Do you think that it will come at least 3-4 years later?
This is a transition which is going to happen. RBI has already put out its draft paper that banks would need to move to the ECL framework. What we need to see is RBI has also articulated that they will give the banks adequate time to move to this. While, if we were to look at it as a one-time shock, on capital, that number could be large. Our very rough initial estimates are about 3 to 4% of tier 1 capital. That much would be the knock. But given the fact that RBI is likely to provide 5 years time as per the draft document, plus the banks are in a much better position today in terms of their own capitalization profile, their profitability and asset quality, the internal accrual should also be fairly robust over the next few years, which would mean that they should be in a relatively good position to transition to the ECL norms as and when they become applicable.